Hello, good morning. You're watching Market Cafe on ET Now with me, Snehi Shah. Let's kickstart the show then by looking at the global handover before we delve into some stock-specific news and also tell you what brokerages are flagging off for us bright and early this Wednesday morning. But before that, let's kickstart with what the global handover looks like. I'm going to take you through what Wall Street did yesterday. While stock futures were little changed last night, the Nasdaq rose to a fresh record high. Yesterday, the Nasdaq popped 0.6% to a record high and closed above the 17,000 threshold for the first time, fueled by a nearly 7% jump coming in Nvidia itself. Nvidia and Nasdaq both seem to be on a gaining spree these days. The tech-heavy index was an outlier, however, as the S&P 500 edged higher by just less than 0.1%. So very flat moves coming over there. The Dow, however, has slid lower by 0.6%, dragged by decline in the Merck shares. Still, the major averages are on track to close the month with impressive gains, partly propped up by the enthusiasm about a better than expected quarterly earnings season. The S&P 500 is up 5.5% this month, while the Dow has advanced 2.7% as well. The Nasdaq, however, has outperformed both of those indices by a wide margin, and it's up 8.7% for the month of May. The gains arrive even as traders have lowered their expectations for Fed Reserve rate cuts. Now, indeed, Fed fund futures trading data suggests a nearly 54% chance that rates will hold steady in September. According to the CME Fed Watch tool, investors are looking to the personal income and expenditures report for April, which includes the PCE inflation reading or personal consumption reading out on Friday as well. So that's broadly what the US markets were doing. And let's also take a look at what the dollar index was up to. Dollar has rebounded, and the US bonds, now that's an interesting move coming over there as well, because the bonds, the 10-year treasury yield has risen above that 4.5% mark yet again, following a weak auction that took place in bonds. So that's the handover coming in from the American markets. Let's also quickly shift focus and take a look at what Europe was doing. It's a sea of red across European markets. DAX is down 0.5%, FTSE down almost 0.8%, and the Pan-European Stock 600 index has also closed lower by 0.6%. So, stable handover coming in from the US markets. Nasdaq outperforming its peer indices, but European markets, that's where the shade of red is coming from. But now Vinny is also joining us in the studio. Vinny, good morning. Also take us through what's happening in the world of oil.
Good morning. And what's happening in the world of oil? Because overnight we saw crude oil prices jump as much as 3%. Now also managing to hold on to some bit of pricing in terms of 0.3% uptick that we're still seeing for the crude oil prices. So we're going to be keeping an eye out on that. As of now, the main reason for that is that, what is keeping the hopes and increase in terms of the crude oil prices is the OPEC meet. That's what everyone is watching out for. Other than that, in terms of the demand pickup that one could see because of the travel season in the US market, the summer season is there. So that is what everyone is watching out for. Now, according to what analysts or traders are expecting from the OPEC meet is that production cuts will be in place. Maybe that is something they will keep a close eye on. And other than that, let's not forget those renewed tensions that actually it's the continued tensions in the Middle East is something that is keeping crude oil prices a bit on the higher side, and that volatility around that is something that's keeping crude oil a bit perked up. Whether you look at WTI crude oil or the Brent crude oil prices, both are perked up in trade today. WTI crude oil at $80 per barrel mark, while Brent crude oil at around 84.5, so around the $85 per barrel mark. Let's move on and also look at what has happened to gold, because gold prices also have risen, and let's not forget all these concerns. Safe haven gold prices continue to rise. 2,358 is what the gold prices are trading at, and silver too, shining in trade, up 0.1% in trade this morning, but keeping an eye out on even the commodities front, that is gold and crude. We'll keep an eye out, close eye on that as well, Snehi.
Well, absolutely. Oil and gold, two important metrics to watch out for amid all the geopolitical tension that we're seeing building up. But let's also take a look at other cues you need to keep a close eye on. And today being Wednesday, it's the Nifty Bank expiry. Globally, not much happening, but from the US, we do have the Fed Beige Book data being released today. So that's going to be an important metric to watch out for as well. Shifting focus back home in terms of earnings today, we have a Nifty 50 company coming out with its quarter four numbers, and that's Tata Steel. And tomorrow, You have the last Nifty 50 earnings coming out. Winnie, it's the end of the earnings season finally, and it's so relieving.
Really?
But really, yes.
But it'll be the beginning. Do not forget of all the annual reports and AGM again. But at least earnings season is ended.
Earnings season is over, so that's one benchmark to look forward to. But well, yes, so tomorrow, last Nifty 50 company coming out with its numbers, and that's Apollo Hospitals. From the corporate action front, then you have the board of Tata Steel that will be meeting today to mull fundraising along with its quarterly update as well. Peninsula Land will be holding its EGM, and Forging's board will be meeting to mull a bonus issue. Now, this is a development that the street is particularly excited about, so we'll be keeping a close eye on this counter as well. Cello World, that board will also be meeting to carry out a preferential share issue today. So lots happening when it comes to corporate action. Now, lock-in period ends for Fedbank Financial Services. More than 60% equity is coming out of lock-in today for this particular counter. And in terms of other events, then you have some commentary coming in from FOMC member Fed John Williams, who's the New York Fed president, and he's going to be speaking about how the inflation is looking like and what's the path going ahead when it comes to the FOMC's policy stance. So important commentary to watch out for, and the US-China high-level climate event will also be taking in California. So well, lots of news to watch out for in India as well as globally.
Absolutely. And talking about globally, a lot of issues, and like we were talking in the Middle East side that we're seeing now in terms of the latest update that we're seeing, Israel's Rafah offensive has stirred up a global outrage and prompted an outcry from global leaders after an airstrike killed 45 Palestinians when a fire ignited a refuge tent camp. The Biden administration has said that it was closely monitoring the probe into the strike, calling it tragic. And additionally, the White House National Security spokesperson John Kirby said that the recent death did not constitute a major ground operation there that crosses any US red lines. Meanwhile, he also said that the US does not have a measuring stick or a quota to measure offensives. Remember, the death in Rafah have tested Joe Biden's promise to withhold weapons from Israel if the US ally made a major invasion in Rafah that put displaced persons there at risk. And in a response, Israel has said that something unfortunately went tragically wrong, and the original plan was to supposedly attack 2 senior Hamas officials, and that there was no intention to cause a harm to civilians.
Well, surprising commentary coming in from the US, where they're saying that deaths of these people living in Rafah is not a major offensive. But anyway, let's move on then. And shifting focus to macros, consumer confidence in the United States has unexpectedly improved in the month of May after 3 straight months of deterioration. The improvement comes amid optimism about the labor market, but inflation worries continue to be a point of bother. According to the survey, consumers believe that the economy could slip into recession in the next 12 months, but nonetheless, consumers were very upbeat about the stock market and more plan to buy major household appliances over the next 6 months.
And keeping it with the macros then, and one of the members of the Federal Reserve, Anil Kashkari, comments that spook streets as he reiterates that the central bank's data-dependent approach for the future rate cuts, says that he wants to see significant progress on the inflation before mulling rate cuts. He also said that the central bank could potentially even hike rates if inflation fails to come down further. And Kashkari said that he was confident the Fed would ultimately reach its 2% inflation target, but added that they are not in a hurry to start easing rates. And that's what we've been seeing in terms of commentary. Not in a hurry to ease rates. That's the word coming in from most of the members of the Fed's team.
Alright, well, let's move on then. And tracking action from the money markets, trouble continues for the yen because the Japanese yen has dropped to a 16-year low versus the British pound, marking a significant milestone in the currency markets. The fall in the yen comes amid ongoing shifts in global economic conditions and market sentiment. Now, this increase underscores the pound's strength relative to the yen, which has been under pressure due to various economic factors.
That was all the global update and top global headlines that we had this morning. But on that note, we'll slip into a very short break. Don't go anywhere. We'll be back with more updates. What should you watch out for the Indian markets? Because Nifty implied clearly showing a sharper fall today.
Absolutely.
Down 410 to 510.
That's not looking good at all.
Yes, so we'll watch out for that, and we'll keep you all updated with what you all should watch out for in trade today.
Hi there, welcome back. You're still watching Market Cafe on ET now. Let's take a look at how the Asian markets have opened up, and while our implied open is indicating a slight shade of red, that's exactly the sentiment across the board when it comes to Asian markets as well. Now, Australia will be in focus today ahead of its CPI reading. Investors will be assessing, Australia's inflation numbers for April, with the weighted inflation rate expected to ease to 3.4% from 3.5% in March. Now, on the back of that, the ASX 200 started the day with a decline of 0.3%, but it continues to fall because it is down 1% as of now. So some sharp cuts coming in across ASX. That index is lower by 76 points ahead of the CPI announcement. Shifting focus to Japan then. Japan opened up in the green, up 0.2%, but as of now it has paired all of those gains is into the red. 0.4% lower is where Japan is. A 150 point cut coming in for Nikkei, also on the back of primarily the yen weakening against the British pound. Moving on then, let's also take a look at what South Korea is up to, because South Korea fell 0.2% on open, continues to languish. It is down almost 1% as of now. So while sharp cuts coming across the board when you take a look at Asian markets. Lastly, let's also take a look at what Hang Seng and Shanghai are up to, and red continues to be the theme for the Asian markets, because Hang Seng is also down almost 1.4%, a more than 250 point cut coming in for Hang Seng as well. Shanghai is the only index showing some positivity over here, up almost 0.3%, a mere 8-point gain coming in on that index as well. So red across the board, with Shanghai managing to hold on to a slight bit of gain coming over there. But let's take a look at how we fared in the trading session yesterday. Nifty managed to close above 22,800, but we could not surpass the 22,900 level. It's key to note that 2 sessions ago we hit the high of 23,000, 23,100, but we've slipped back to 22,888 on the spot basis. Implied open indicating 22,830, a very subdued start implied for us this morning. So we'll just have to wait and watch and see what happens in today's trading session, given the global handover, especially Asia looks very shaky as of now.
Absolutely, Asia is looking shaky, and a lot of geopolitical tensions is surely something that is keeping the markets a bit spooked up. We do have the expiry this week overall for the month, as well as in terms of the election results that will be next week. So that volatility is something that has continued a bit on the street, and since yesterday we have seen that a bit of a flip-floppy for the Nifty, so keeping an eye out on that. Welcome back. You're watching Market Cafe on ET now, and let's move on and talk about Aditya Birla's subsidiary Novelis Inc. has filed for an IPO in the US, offering 45 million shares in a price band of $18 to $21 per share. The company is targeting a valuation of up to around $12.6 billion in the US IPO market. And Somit is joining in with us to give us more details on that. Somit, what's the latest update that we have in terms of Novelis IPO?
Well, Hindalco definitely will remain in focus on the back of the fact that it's a subsidiary, 100% subsidiary. Novelis has announced much more details about this IPO. Firstly, the price band that they have announced is around $18 to $21 per share, and it's an OFS where Hindalco's arm will be selling around 45 million shares, and there is also a green shoe option of selling additional 6.75 million shares if there's an oversubscription. Now, post IPO, Hindalco will own close to 92.5% stake in Novelis and 91.4% if the subscription, if there is an oversubscription in the offer. Now, if you look at the valuations, given the fact that there are 600 million shares totally in Novelis, the market capitalization on listing could be anywhere between 11 to 13 billion US dollars, and given the fact that the company has a net debt of close to 5,300 million US dollars, the enterprise value of Novelis comes to around 16 to 18 billion US dollars. Now, this is around 7.3 to 8.1 times its FY26 EBITDA, which is slightly higher than what the street has been estimating, anywhere between 6.5 to 7.5 FY26 EBITDA. So the valuations are favorable for this IPO. Now, from this IPO, what Hindalco will get is anywhere between 810 to 1,100 million US dollars, depending on how many shares get subscribed and what price they are finally issuing these shares. Now, the key question here is how will Hindalco utilize this proceeds, given the fact that Hindalco's domestic business is a net cash company. It does not require cash for its capital expenditure, and so how will Hindalco actually utilize this proceeds, given the fact they also will not be putting in this money into Vodafone Idea. So most likely these funds funds could be utilized by the company for an organic or an inorganic expansion. So keep an eye out for Hindalco. Most likely post the IPO is concluded, there could be some expansion notice coming in from Hindalco going forward.
All right, Samir, thanks so much for taking us through what this listing could look like and what the funds will be allocated towards. But we also caught up with Axis Securities' Aditya Velekar on the Novelis listing and what that could look like. Hear out what he had to say.
If you calculate the implied EV/EBITDA post this today's announcement, then on FY26 Novelis EBITDA estimates, we are getting a multiple of 7.8x. So I think it's slightly better valued. We are giving a multiple of 6.5x. So the kind of multiple which we are getting on a market cap of 12.6 billion on Novelis estimates of 26 EBITDA is 7.8x. So slight premium over the multiple which we are giving. But ultimately, we how the market gives a holding company discount for the 7.5% stake sale is something which we have to see. The stake sale is not substantial. It's only 7.5%. So if we assume only a 10% discount, holding company discount, still then we're getting the implied EV/EBITDA multiple of 7x. So I think it's a slightly neutral to positive step.
Okay, let's move on and shifting focus to an exclusive then. Sources tell us that the Finance Ministry is in favor of giving additional time to select PSU banks to meet minimum public shareholding norms. My colleague Prakash is joining in with us to give us all those details. Prakash?
Yes, we are learning from our sources that the PSU banks are likely to get more time to meet minimum public shareholding norms. We are given to understand that the DFS is in favor of providing additional time to PSBs to meet 25% minimum public shareholding norms. In fact, DFS is in touch with the SEBI to provide exemption to some PSBs. As you are aware that the 5 PSBs have to meet 25% minimum public shareholding norms by August 2024. However, some of these PSBs have already started the process. Steps have been taken, but we are given to understand that the additional time is likely to be given to these PSBs considering various factors. Along with that, the sources are also informing that the QIP route is going to be preferred route for stake dilution. However, any decision regarding exemption will be taken after June 2024.
All right, thanks so much, Prakash, for taking us to through that. But let's move on then. And RBI has launched 3 new initiatives to facilitate ease of doing business for investors. The central bank launched the Retail Direct mobile application, the Prava portal, and FinTech repository. The Retail Direct app aims to allow retail investors to easily trade government securities through their phones, and their new Prava portal, which is the platform for regulatory application, validation and authorization, and that is a web portal designed to make the process of receiving regulatory approvals seamless. Additionally, the RBI also launched a FinTech repository which will contain essential data on Indian FinTech firms as well.
Okay, and with that, apart from the market largely pricing in the policy continuity, it's important to take stock of what happens after the election, and once they are out, where the markets will be headed after that, what would be the strategy. Let's hear out the opinion of the market veterans. We did speak to Ramdev Agarwal, we did have Mark Mobius as well as N.J. Kumar. What they had to say, listen into it while we sip into a short break.
Post-election is going to be a very interesting time. And if markets have corrected by 10-15%, I would think let the market correct by another 10%. So that absolutely is like it's a ground zero. And then we start with a new administration and new thought process, new 100 days, new ambitions of the government, new ministers, and they will come and run for their targets and things like that. And then the new energy in the economy will also come. So at that point of time, markets will also accelerate to the new highs. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that and you buy the good stuff, high ROE, high growth at reasonable P, you do well.
There's no question there will be a correction. The market has gone up so far and so fast and for such a long time. We are due for a correction, and a correction of 15 to 20% is normal. This may be on the back of the election if there's disappointment about what Modi's election results are, you may see correction. But that does not deter from the overall growth that we're seeing in India and the recovery. So if there's such a correction, it would be a great time to be buying.
The big story is that the importance of the FI flows have waned quite significantly and will continue to do so. While they may have cut their shorts, it doesn't mean much. In fact, if anything, I feel the market structure is favoring a correction immediately post the elections when the event is out of the way, because every scenario has been factored into this run-up. And while there is no one who really has a clue on the numbers as complex as they are in terms of making a guess, my own assessment is that if continuity is the way forward after the elections, then we'll probably have some kind of a correction.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Thanks so much for staying tuned. Now let's take a look at Symphony's management meet, and MK has released the key takeaways and guided that the company is expected to outperform with improving margins. My colleague Jinay is here with all of the highlights of this meet. Jinay, take it away.
Well, yes, there is a positive commentary coming in from management meet from Symphony. MK believes that the air cooling industry is set to double over next 5 to 7 years. And if we talk about Symphony, they expect the company to outperform with improving margins. If we talk about the summer of 2024, they believe that there was a strong demand across all segments and across all the markets. There was some major restructuring happening in the company. Now MK believes that the restructuring is now behind, and the international operations will also improve from starting Q3 FY 2025 onwards. The company had also entered into new categories such as towel and kitchen fans, the MK says, and the management says that the overall response from this category has been received positive. Moving on, the commercial and industry centralized cooling opportunity is something the company believes is a great growth opportunity.
Okay, Jinay, thank you so much for that. That's the update coming in on Symphony's management meet. Keep an eye out on that. But one more stock we should keep an eye out on today is Tata Steel. They're set to report their Q4 numbers. But what should we be expecting in terms of numbers? Should we expect an uptick there or improvement in revenues, profits? Shesha is joining in with us to give us more details on that. Shesha, good morning.
Well, yes, we are expecting mixed set of numbers from Tata Steel this time around. European EBITDA per ton losses are expected to narrow on a sequential basis. As far as India operations are concerned, they are likely to be impacted by lower realizations and higher coking coal consumption costs in the fourth quarter. As far as numbers are concerned, consolidated revenues could come in at 57,521 crores, which is an uptick of about 4% on a sequential basis. Margins, however, could contract. We are expecting margins at 10.8%. versus 11.3% that the company had reported in the third quarter. As I mentioned, European operations are expected to report good set of numbers this time around. Volumes that the company has reported saw an uptick of about 7.7% on a sequential basis. Higher sales volumes, higher realizations are expected to aid European operations, and Europe EBITDA per ton loss is expected to narrow to about $105 to $115 per ton versus $178 per ton loss that the company had reported in the previous quarter. As far as India operations are concerned, volume growth of about 11% is what the company has already reported. Lower realizations and higher coking coal consumption costs are expected to impact spreads. So for India operations, EBITDA per ton is expected to decline by about 15% on a sequential basis to 15,000 rupees per ton. In terms of management commentary to watch out for, commentary with respect to transition of its UK business and capex guidance for the next 2 to 3 years will be crucial. But all in all, mixed set of numbers are expected. Revenue is expected to see a growth of about 4% sequentially, but consolidated margins could contract on a sequential basis.
Okay, Ashesha, thank you so much for that. But Jinay, let's take it across to you again and talk to us about the stocks that will be in focus today on the back of news flows or earnings.
Well, yes, so starting off with block deals, Timken India is in focus as promoter sold off 50 lakh shares at a price of 3,913 per share. Some of the buyers include Asia Mutual Fund, Axis Mutual Fund, Morgan Stanley Asia Singapore, Nippon Mutual Fund and HDFC Mutual Fund among others. Moving on, the media reports that PNB Housing will be in focus as a block deal is likely to happen here. The company will be selling around, the block deal will be happening around 500 crores for 69.6 lakh shares, and the floor price for this deal is set at 717 per share. Next up, Inox Wind will be in focus as Inox Wind Energy has sold 5.5 crore shares at 150.58 per share. Some of the buyers include Morgan Stanley Asia, Goldman Sachs, Singapore PTE, BNP Paribas Arbitrage and iRedge Broking Services. With this, Inox Wind Energy has raised around 900 crores and will be using this to deleveraging the external debt in IWL. Moving on back on earnings, Amar Raja will be in focus as company reported a good set of numbers. The revenue was up around 19.5% and the net profit grew around 61.4%. Gensol Engineering, another strong earning candidate, the revenue increased 143% coming in at 399 crores versus 164 crores year-on-year basis. The net profit also grew around 170% coming in at 20 crores versus 7 crores, and EBITDA margins also improved quite well. On the flip side, Linde India reported a poor set of numbers. The revenue remained largely flat, coming in at 630 crores this quarter versus 630 last quarter on the same period, and the net profit grew around 6%.
Thanks so much for taking us through that. We'll be keeping a close eye on all of those stocks. But well, two more counters to look forward to in today's trading session. Expected to have good moves today on the back of a good set of quarter four numbers. The first stock that I'm talking about today is Eureka Forbes, and good quarter four results coming in, better than expected results. In fact, amid a generally sluggish demand environment, so the company has done pretty well for itself. Q4 FY24 was a seasonally soft quarter, but despite that, they've managed to log in some good gains. Now, pre-ESOP EBITDA margins were up 90 bips on a year-on-year basis, and volumes also have, volumes have also gone up for water purifiers, vacuum cleaners, and the company continues to remain net cash on the balance sheet, and that has increased to 110 crore rupees from 60 crore rupees earlier. So good set of numbers coming in from Eureka Forbes as well. And the second stock that I wish to highlight today is Aditya Birla Fashion, or ABFRL as we know it. Very good numbers coming in this time around as well. EBITDA margin has expanded roughly 350 bips on a year-on-year basis, and that is more than 100 bips beat than what the street was expecting. And this has led by contraction in staff costs as well as other expenses, so that has majorly aided the company's numbers this time around. Ethnics business has seen a 51% year-on-year growth on higher same-store sales growth and network expansion, and subdued demand has impacted Madura, but Pantaloons has also reported an operating margin miss. But other than that, numbers are looking quite good when it comes to ABFRL on the back of that EBITDA margin expansion that they have seen to 12%, Winnie.
Okay, surely keeping an eye out on that. But let's move on and also go across to Ansh to get in what's happening in the world of F&O and what should we be keeping an eye out in futures and options today. Ansh, good morning.
Good morning, Vinny. So starting with Nifty first, index has been declining for third consecutive session. However, we may face some good support around that 22,750 to 22,800 level, which is a previous breakout level. So until and unless we don't give a decisive breakdown from here, we can see some positivity in Nifty. Whereas on option front, we are seeing some call writing happening at the psychological level of a 23,000 level by over 1 lakh contract, indicating option traders expecting Nifty to face strong resistance around this level. Also, we have expiry tomorrow. So because of that, we are seeing rollover is around 49.2%, which is very below that 3 series average of 71%. But we have 2 sessions left, so we may see a spike in rollover as well. Talking about Nifty Bank, index has been facing strong resistance at that 49,500 to 49,600 mark from last 2 sessions, and it has also formed bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. This gives the bias negative for Nifty Bank till we don't give a breakout from this 49,500, 49,600 level. Whereas on option front, we are seeing call writing happening at 49,200, which is the current level only. Apart from this, we are seeing good call writing happening at 49,600 as well. This is the same level where we are seeing a resistance in the chart as well. So this is the key level where we may face a very strong resistance in today's session. Also, if we talk about FII, then in previous session, we are seeing that they added around 10,000 long contract in index futures, and they covered around 14,700 short contracts, due to which the total long has gone up from 51.8% to 54%. So this is what FIs have been doing, and they have been getting positive from session by session.
Guys have been getting positive, moving to the positive session by session is what we're watching out for. But Jefferies has come out with a note on India's strategy. They're talking about flows and domestic inflows. When you look at just 2024, look at the number, $7 billion per month. That's 2 times of the previous highs and 3 times on a year-on-year basis. So we have seen a staggering growth over there for the domestic inflows as well. Now, this overall, when you look at it, one, what are the factors and what DIIs are expecting? Positive election outcome, rising risk of reversal in DII flows. Yes, that's surely something that everyone is watching out for. Potentially, any regulatory action on derivatives could be a trigger of that. And FPIs would likely buy the dips, limiting the downside on any large cap companies. So that's not a worry, because we could maybe see FPIs actually coming in. And obviously, what Jefferies is highlighting, that at a 20% financial saving and with a predictable flow to equity at less than half, risk of domestic inflows reversal is something that they're seeing a rise, and that is what I mentioned even before. But yes, keeping an eye out on that. That's the word coming in from Jefferies on the flows in India and the India strategy that they're watching out for.
Alright, well, interesting note coming over there, Vinny, but let's also take a look at some other brokerage notes that we are getting this morning. And let's start by looking at what Kotak Securities has to say on Oil India. They've downgraded the stock to a sell rating from a reduced rating, but have hiked the target price to 500 rupees from the 475 rupee per share earlier. They say that higher crude realization and other income production looks good going ahead. And when it comes to production guidance, they say that production guidance also continues to remain strong going ahead, but they believe that there's too much optimism built in the company as of now. And quarter 4 ahead on higher crude realization and higher other income is something that they're penciling out that I mentioned. And with a sharp run up, they believe that the production upside is priced into the stock. So on the back of this, they've downgraded the stock to a sell rating from a reduced rating, but nonetheless have gone ahead and hiked the target price to 500 rupees from 475. Now we have a very interesting note coming in from Nuvama on the entire new energy space, and they've started talking about Inox Wind. They've initiated the coverage on that with a buy rating and a target price of 193 rupees per share. Remember, Inox Wind was a stock that was beaten out in yesterday's trading session, and that was locked in lower circuit, lower by 10% on the back of multiple block deals we saw yesterday. So they have gone ahead and initiated a note on Inox Wind today. They believe that the company is a beneficiary of regulatory tailwind as well as favorable market conditions, and order book has climbed to a new high as well. They've defended the 15% market share even in a continuous down cycle, so that is something that Nuvama is liking for Inox for Inox Wind. And reviving macros in the duopolistic wind EPC market shall enable it to achieve order book and revenue CAGR of 47% and 73% over FY24 to FY27. So positive note coming in from Nuvama on Inox Wind. Moving on, the second renewable energy stock that they want to talk about today is Suzlon Energy. They've initiated coverage on that stock as well with a buy rating and the target price of 53 rupees per share. They believe that strong industry tailwinds are a powerful growth enabler for the company. Benefits of restructured balance sheet are starting to trickle in. The company is capable of sustaining its lead in the WTG and turnkey EPC execution, and they expect order book and PAT CAGR of 21% and 61% over FY24 and FY27. So, well, get another positive note coming in for Nuvama on Suzlon as well, Vinny. But more notes on our radar, I believe.
Absolutely, more notes on our radar. Hindalco, we're keeping an eye out on that. We spoke about Novelis as well, because little cheer is what Investec is expecting because of the listing of Novelis in the US market, and use of end funds is still unknown. Tax leakage is something everyone's watching out for. Investec continues to maintain their buy, 750 rupees target price. Concord, on the back of its earnings, we have Jefferies, who's maintaining a whole target price of 1 1,410 rupees per share is what is for Concord. So keep an eye out on that. Jeffries says that the outlook is intact, but valuation is something that is limiting an upside. Other than that, what we're keeping an eye out on is LIC. After its numbers, Goldman Sachs maintaining a neutral rating. The management said that they expect non-par products actually to outpace the rest of the world. And lastly, Trent, we have Morgan Stanley, which is maintaining an equal weight but hiked the target price overall for the company to 4,817 rupees. Growth potential as well as overall in terms of to navigate the phase of growth, they are in a positive trend there. So yes, that is what one is keeping an eye out on, and that is what we are watching out for as well. But let's move on and talk about some of the important news flows and top headlines this morning. A day before campaigning for the last phase of Lok Sabha polls comes to an end. Prime Minister Narendra Modi held a roadshow in Kolkata. The BJP's show of strength in Bengal comes at a time when the Saffron Party is eyeing to shake Mamata Banerjee's citadel and take its tally past the 18 Lok Sabha seat it won last time. Moving on to some update on the weather front, because mercury continues to break all records in North India. Temperature reached a record high of 49.9 degrees Celsius in Delhi, in Mangeshpur, as well as 49.8 degrees in Narela. This is the highest record temperature in Delhi, not just this season, but in the last 100 years. In neighboring Rajasthan, temperature crossed 50 degrees Celsius in Rajasthan's Churu and Haryana's Sirsa as well. Moving on to some more updates, Delhi Haryana fight over water resurfaces amid these increasing temperatures, and AAP claims conspiracy by BJP government in Haryana accuses a neighbor of not releasing Delhi's share of water. AAP has now threatened to move the top court in 2 days if the situation does not improve.
Alright, well, let's keep it going with the weather. And heavy rain and thunderstorms triggered by the cyclone Remal has left at least 37 people dead in northeastern states, including Mizoram, with dozens still missing. Mizoram has been the worst hit state in the region, with at least 27 people dead and several still missing. Meanwhile, heavy rain continues to lash Kerala, with the IMD issuing yellow and orange alert for several districts. Let's keep it going. Let's talk about sports. And if reports are to be believed, former Indian cricketer Gautam Gambhir is leading the race to become the head coach of the Indian men's cricket team. Remember, Gambhir has been a part of India's 2007 T20 and 2011 ODI World Cup winning team and played match-winning knocks in both the finals. He also led KKR to the IPL triumph this year that we did see recently.
Okay, that was all the top headlines that you should watch out for today as well on the domestic front. But with that, we are absolutely out of time on this edition of Market Cafe. Thank you so much for tuning in. Don't go anywhere. The markets will take the action forward and prepare you for the day of the market.